Well, welcome back. Stocks are lower this morning. Investors are awaiting more results from the midterm elections. Take a look. Dow Industrials down 66, S&P down 2.25. The Nasdaq just turned higher. It is up about 4 points. We have breaking news from Meta, laying off up to 13% of the workforce. Joining right now, Meta shares right now up 3 1/3%. One of the reasons that we're seeing strength in the Nasdaq. Joining me right now is Wealth Consulting Group CEO Jimmy Lee. Jimmy, good to see you. Your reaction this morning after the midterms and the impact on stocks and the economy.
Good morning, Maria. Great day to be on with you. You know, I'm a little surprised that the GOP didn't do better, as many predicted, but we're probably just going to end up with a gridlock, as we knew going into the midterms for the next 2 years. And it also kind of, I think, maybe supports the idea of how resilient the consumer is. Even though the consumer is not happy with inflation, they kind of voted for status quo to some degree, right? So I think in terms of how it's going to affect stocks and the economy is, again, I think it's good news that we're probably not going to see a whole lot of new spending, which is a good sign for inflation. So I think investors overall will digest the election and take it as a positive.
Well, Brian Brenberg, jump in here, because typically when you have divided government, stocks trade higher.
Yeah, I love it.
Is that what we're seeing this morning? Because right now we look at weakness in the markets, and I'm wondering if it's because investors are disappointed.
Well, you know, they love the divided government aspect of it because it means nothing gets done. But the other problem you have is you've got a platform for the economy right now that's not very good. So in some ways, you're looking for some change. We need more energy production in this country. If Republicans only end up with the House, they don't have very much leverage to do that, Jimmy. So I look at the markets and them reacting to this result, and I think I see sort of a sense of maybe we don't get the kind of leverage that Republicans could provide, and that means we end up with this sort of grim economic outlook for longer than we thought. What do you think?
Well, I hope that that's not the case. I think, again, the Fed navigating inflation coming down while not destroying the economy is still going to be a difficult task to accomplish, but there's still a chance. And so I think it's going to be end up being more about how bad does the economy get, you know, before the Fed signals a pause. And I think the key message that I want to have viewers hear from me is investors need to be positioned prior to the words pause coming out of Fed Chair Powell's mouth, because stocks will be up much higher by the time he does that. And so it's important that investors take a longer term view. And now that we've got the midterms almost behind us, you know, stocks tend to do well after the election. And while we still have a lot of potential risk to navigate in the markets, and interest rates are still going to climb through Q1, I think that stocks are positioned to perform pretty well from here.
Well, you know, Dagan, I want to get your take on where things go, because last night I made the point that this is a good news, bad news story. The good news is that viewers started to really vote out bad policies, like, for example, what we saw in some areas like Oregon, you know, but at the same time, the damage has been done. The economy is weakening. We're seeing that with big tech. We're seeing these layoffs this morning. We're going to probably see a weakening situation in 2023. I mean, the October Consumer Price Index is out tomorrow. Right. We're expecting another pretty big move. The month-over-month increase estimates of 0.6%, 8% year over year. But I was reading one note, Dagan, and they were talking even as high as 9% expected for the CPI tomorrow. Your thoughts?
Right. Inflation's still a problem, and the Federal Reserve will have to keep fighting it and keep raising rates. The market has tried to, at every turn, try to force the Fed to pivot or stop raising interest rates. And I think that you have a scenario, regardless of who controls the House and the Senate, of an impending recession because of what the Federal Reserve has done, and inflation that it needs to keep fighting. And the markets need to kind of wake up to that scenario. And there's a lot of exuberance, or what I call hopium. You know, they're intoxicated with hopium about the Fed stopping, and somehow that's going to save assets galore. And regardless of who controls the House and the Senate, that doesn't really change what Jay Powell and company do in the coming months.
Jimmy, bottom line, you want to buy stocks here? You just said that you think things are going to be up a year from now.
I really do. I mean, I may be part of that hopeism that Dagan was just talking about. I don't want to sound overzealous, but sure, there's a lot of risk, and fighting against the Fed is not something that's easy to do. But you've had a lot of destruction in the stock market and a lot of names. We haven't even had the market go down as much as a typical bear yet, so we still have a lot of volatility risk potentially ahead of us.
Yeah.
But if investors have not positioned themselves for the potential comeback in stocks, which I think by the time the Fed does signal a pause, you're going to have a dramatic rally. And the key will be how resilient the economy will be. So far, consumers are still very resilient. We've got a lot of cash. Consumers have a lot of cash, and businesses are holding on. So my hope is that the economy can survive by the time the Fed reverses course.
Well, that's the reason the Federal Reserve will keep raising interest rates, is because it sees a consumer that's still willing to go out there and spend and run up their credit card debt to do that. And again, the destruction hasn't really happened yet, not in assets.
I think you want to look at how some of these big tech stocks are trading. I'm talking about what some call the generals, that is Microsoft, Amazon, Apple, Google, etc. These stocks are down while the S&P 500 is up. Does that indicate that we're going to have a tougher than expected retail season? We're going to get into that. I want to take a look at that because that's going to be the next big catalyst that we're watching. What will the holidays bring in terms of the consumer? Jimmy, thanks very much for being here. Jimmy Lee,